I'm Stephanie Dupuis with Dupuis team at Keller Williams West Sound. I'm excited to meet this morning with Kim Mason of the Mason Group at Cornerstone Home Lending. Welcome, Kim.
Hi, Steph.
Hi. This morning we're discussing what's going on with the home loan industry in the last, last 7 to 10 days or so?
Yes, well, a couple of weeks, actually.
Okay. And can you give us a brief synopsis of what's been going on?
Sure. So with COVID-19 becoming more pronounced, the stock market really took a dive, and so did mortgage bonds. So the Fed then lowered the federal funds rate to almost zero, trying to step in and help, right? And they did that on a Sunday. So in lowering rates that dramatically, it caused a huge run of refinance applications, right? In addition to purchases, but a lot of refis, more than I've ever seen in 21 years, right?
Wow.
More mortgage applications received in a 2-week period than I've ever seen in my career.
Wow.
So the challenge with that is that it put a tremendous strain, right, on the capacity of lenders. Because here's this huge influx of applications, and we still have the same number of operations people, right? Every bank and mortgage company. So, so there's that, and then there's the question of, okay, so rates became really volatile, right? So lenders had to raise rates to kind of slow the influx of production. They couldn't handle the capacity, and then we had this wild up and down rate situation for several days, to where the rates would sometimes swing as much as 1 full % to the rate within 3 hours. So then the question is, do borrowers still qualify, right? And so you've got people out there making offers on homes and getting signed around, and you're just hoping that rates are going to swing back in the other direction, because at this particular moment, they no longer qualify. But give it an hour and they're going to be fine. So, you know, the other effect that it's having right now on home loans is, can the borrower still qualify because of getting the documentation that we need? So they qualify, they meet the guidelines, but can we get a 4506T from the IRS? The answer is right now, no. The borrower has to get it independently. They're because of the stay-at-home order, those employees aren't working. But we have to have that.
What's going on? You guys got
right
with applications, then the rates started going up and down. It's like the ship rocky, and then they get the documentation they need because you have a stay-at-home order. Am I understanding this?
Right. Yes. And employment. Also, the stay-at-home order. Now, how do we verify employment for? I mean, maybe someone is still working full-time, but they're working from home, and that number that we would normally call to verify employment, there's nobody there answering that phone. There's no. You know, so it's difficult to get that verification of employment. So it's kind of changed everything, right? And in the middle of having tremendous capacity, you know, influx of loans, so exceeding capacity.
Okay, wow, that was great. Yeah. Taking something very complicated and explaining it in simple terms. So, have you ever seen anything like this as a lender?
No, never. I've never seen anything like this. And, you know, the other question that's happened is forbearance, right? Because everyone wants to be able to receive some assistance if they're not able to make their mortgage payment. And of course, as lenders, we want that to happen as well. But the trickle down effect of that has caused a tightening of underwriting guidelines for lenders, because if there is a risk that the borrowers aren't going to be able to make their first payment, that puts a tremendous financial strain on the lender. And it could, if that happened simultaneously with many buyers, it could cause the collapse of an independent mortgage company. That's
what it seems, because we also, I think what a lot of people don't understand, and correct me if I'm wrong, because I'm a real estate broker, and that's why you're here, is to explain the lending side of this, is people get a loan, but they don't pay am I understanding correctly? They don't pay the lender directly. They pay us what's called the servicer that collects the payment.
Yep. So the servicer owns the security, the mortgage-backed security.
Okay.
Fannie, Freddie, and Ginnie Mae, they own the collateral. They own the house, right? And then the servicer owns the mortgage.
Okay.
So that's, and then the mortgage is sold, right, as a mortgage-backed security, and to people like me and you, right? It's in our retirement plans, or our investment plans, or mutual funds. So that still has to be paid out by the servicer. They still have to make that principal and interest payment to the investor, who purchased that loan as a mortgage-backed security. So if they don't receive the payment from the borrower, they still have to make that payment to Fannie, Freddie, Ginnie. And you can see how if that happened with a significant number of home loans, it would cause the collapse of that company, because it would be more money to pay out than they had available.
Yes. So what we thought was, so this is and you're going to correct everything that I say that's wrong. I'm going to try and translate for someone like me out there. Like many of us thought when this first happened, we're driving down the street going 80 miles per hour, and the weather's nice and we're feeling good, and this driver comes and blindsides us.
Yeah.
There's violence. And we're like, oh, we've got a solution. Don't worry, we'll clean up the mess and you can not pay your mortgage for a bit. And we're all like, whoa, wait a minute. If we all don't pay our mortgage at the same time, boom, 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 domino effect, right? And
yes.
Now domino effect, and the government went, don't worry about it, kids. We'll come in and we'll take care of it. We'll save the day. And the government came in, didn't they, a couple days ago or a week ago, and tried to buy some of these and help boost this up. And that messed up things a little bit more too, didn't it?
So that's a good question and good point. So they did step in and started buying mortgage-backed securities, right? So that was a big help that brought interest rates back down, and that was an immediate relief. The problem is with them continuing to buy these mortgage-backed securities and keeping the interest rates low, it's creating a problem in the hedging position. So that's more complicated than we can get into here.
Yeah.
But what's happening is it's actually putting a lot of mortgage companies at tremendous risk again. So from a different angle, and it's a huge issue. So so that's a challenge as well. Now this morning you'll see that the Fed has slowed on buying those mortgage-backed securities. What needs to happen is rates actually need to go up a little bit to ease that hedging situation, so that mortgage lenders don't take such a tremendous loss on their hedging positions. And so that's going to be helpful actually for them to not buy so many. They need to just take a break, let rates go up a little bit, get these loans through that are in the pipeline right now, and then rates are going to go back down. They're going to be low for quite a while here through the year.
So it's okay if rates go up. That's actually in all of our best.
It's actually a good thing. It's a good thing because we need to be able to get these loans through the pipeline that are in there right now. It doesn't matter how low your rate is if you can't get your loan closed, right? And so, a lot of independent mortgage companies really focus on purchase business. So there's a lot of other good local companies that they're going to focus on those purchase loans and get them closed on time. And the refinances are going to take longer to close. But there are a lot of banks, credit unions, different lenders that aren't necessarily that way. They're first in, first out. And those purchase loans are not going to close on time. So we need a little relief.
Understood. Excellent. Well said. So what can home buyers do right now, or what should home buyers know?
So what home buyers should know is that your lender is over capacity, right? That their operations people are working tons of overtime. They're working all weekend. I mean, I don't think my team's had a day off in 3 or 4 weeks. I mean, through the weekend, every day they're working all the time. So you've got to be patient. You have to understand like what the current climate is. It's very, very different from just a month ago. A month ago it was every lender needed every buyer, right? And they would do anything to try and get that buyer. They needed them. That's how we stay in business. Well, now in the current climate, actually, the client needs the lender because they need to know that their loan's going to close. They need to know that when they lock that rate in, that lock's going to be honored. Because I'll tell you, week before last, when I'm pushing the button to lock a rate, I was getting back up. Nope, rates changed. I mean, within 5 minutes from having the conversation with the client to pushing the button to lock the rate in, the rate got worse by, a half a point to the fees. So rates were just crazy. So as the buyer, shopping on rate right now is non-existent. And that's always what we've shopped by, right? You look at the APR, you look at the interest rate. That's not a thing right now
Mm.
because rates they change every few minutes. And so you can get a quote from one lender and say, I want you to match this, but that quote is irrelevant.
Moving target then is what you're saying.
Yes, yes. And so really right now, doing your due diligence is a little different than it was a month ago. Doing your due diligence is making sure that this is a reputable lender that you trust, that your agent knows and trusts, that's going to close this loan on time, that's going to honor the lock when they say the rate is locked in, and that they are financially strong and have a plan, you know, for what's happening right now. So it's a different type of shopping that you're going to be doing right now.
Yeah, I think you bring up a good point there, because our message to buyers, you know, from the real estate broker standpoint, is never shop for rates. Obviously, you've got to not be ridiculous, but a quality mortgage lender or lender is not going to ever take advantage of you with the rates.
Right, exactly.
There always is, and this is a great example. You need a lender who has depth to their experience, and they got to be smart enough to navigate a situation like this. So what would be important for home sellers, maybe as their home listed right now, to know?
Yep. And I'm going to make one more comment I should have mentioned for home buyers, is that be aware when things are a little different right now. Like when you get your approval, your final approval, and you're good to go, you may still be asked for something else. And I know that's frustrating. It's just, we're subject to the market like everyone else is right now. And we have to verify that that person is employed before closing. And not just that they're employed, but that they're actually still working. So we're going to need a pay stub.
Which isn't a given right now.
And every lender is different. So it's not a thing where you can say, well, this lender doesn't need that and this one does. Every lender is figuring their own way out of how to navigate this, and they're all doing the best they can, and they are not out to get you. I promise. Right? And so you're going to need and they need a pay stub, you know, before closing that shows that you're still getting some hours, that you're still working. And so expect that you're going to be asked for some things that you maybe haven't been asked for in the past. And it's just because we're trying to all make this come together. Lenders typically don't get paid unless your loan closes. So trust me, they want this loan to close as much as you want it to close. Okay, now you asked me about sellers.
Yeah.
Okay, so here's the thing about sellers. I would think about appraisers right now. Like that's a challenge. Appraisers understandably don't want to go into homes. And of course there was a new statement from Washington State this weekend that appraisers are considered essential along with realtors, that they can do business. But think about it. If you're an appraiser, do you really want to be going into other people's homes all day when you have a stay-at-home order? And you know, that's a matter, I guess, of opinion of everyone has to look at their own heart as to what they feel like is doing their part. And a lot of people feel like staying home is doing their part to stop the spread of the virus. And so I have to honor that, you know, when an appraiser says, I'm just not going in homes right now. And so you have to think about that as a seller and allow some flexibility and maybe a longer closing time, because the lender may be able to easily close it in 30 days or less. But what about the appraiser and the
inspector?
Right. And the home inspector. So I've got, you know, a loan right now that I have offered $3,500 for the appraisal, and I haven't got it accepted yet. Now it's jumbo. So, you know, there's different, that's a little bit different, but it's really a struggle right now to get appraisers to go in to accept the order. Plus they're slammed, right? They're already buried. They're already backed up with orders from that big refi boom that happened and is happening. And then they got this, you know, work stoppage. And so that part is tricky. So as a seller, you know, be patient and know that this home buyer, they're a fellow community member. Yeah. They're not the enemy. It's not us against them. The buyer and their lender aren't trying to dupe you out of closing on time. I mean, if they're having a struggle, it's legit, and just try and work together to make it happen. And sometimes that's going to mean an extension, and that's not because their lender's terrible or their agent isn't good or something like that. It just is what it is.
Excellent. Really good information. So what would you say to real estate brokers and realtors right now? What do they need to know, and what do they need to be communicating to their clients?
Yeah, so first and foremost, they need to be the professional. They need to give expert advice. They need to be confident in communicating with their clients that it's all going to be okay, right? This isn't the end of the world, but you have to be able to deliver bad news, or that, hey, this appraisal hasn't been accepted. We may end up having to wait this out. It may close a couple of weeks later than we expected. And you have to be the voice of reason. You need to communicate with clarity and confidence and grace with your clients. That this is what's happening, but this is so short term. It's just a couple of weeks or however long the delay is. Looking back on this, that's going to be a blip on the radar. You have to be the expert right now. You cannot be desperate. You can't give into fear. You need to be confident that they hired you for a reason, and they're lucky to have you, and you're there to keep this transaction together, and they're scared. So be confident. And I think that's the most important thing that a realtor can bring right now to the relationship.
Thank you so much for taking the time to be with us today.
My pleasure.
Kim Mason with the Mason Group at
Cornerstone Home Lending.
Home Lending. You practice this for me. Tongue I struggle with my Stephanie Dupuis with Dupuis team at Keller Williams, West Sound. And again, appreciate your time.
Thanks for having me, Steph.
All right. Thank you.
Bye-bye.